Very good morning, everyone. Everyone fine? Super. Very good. Today we are going to start our lecture number 8 of CA Inter Advanced Accounting Regular Batch. Last class we were doing AS10 and we have completed up to subsequent cost. Let us revise from subsequent recognition. So after initial recognition, we started subsequent recognition and we have understood that under subsequent recognition, measurement can be done under two models: cost model, revaluation model. Cost model, how to calculate carrying amount: cost minus accumulated depreciation minus accumulated impairment loss. Revaluation model, carrying amount will be calculated by taking fair value on revaluation date minus any subsequent accumulated depreciation minus any subsequent accumulated impairment loss. Then I say that about impairment loss, detailed discussion will be done under AS20. However, depreciation will be covered under AS10 only. Now this option is given to the entity that is as per class wise, not item wise. Okay. Now whenever there is a revaluation model, then when to perform that revaluation model? So what our AS10 says that if any item of PP experience significant changes in the fair value, then do annual revaluation, otherwise revaluation after every 3 to 5 years. Now whenever there is a revaluation, they can be upward or downward revaluation. The accounting treatment depends upon first time or subsequent revaluation. First time upward, any gain will be transferred to revaluation reserve. Downward loss will be debited to PL account. Subsequent revaluation depends upon the previous revaluation. If previously upward, again upward, then the gain will be credited to revaluation reserve. But previously upward, now downward, the loss will be first debited to revaluation reserve account. Any balance loss will be debited to PL account. This journal entry will be revaluation reserve account debit, PL account debit to PB. Now, if previously there was downward, then again the loss will be debited to PL account. But if previously downward, now upward, then that gain will be first credited to PL to the extent of previous decrease. Any balance gain will be transferred to revaluation reserve. Means journal entry will be what? PP account debit to PL to revaluation reserve. Okay, sir. Then we have done about the presentation, means adjustment of carrying amount of asset due to revaluation. In this, there are two techniques. Technique number one, accumulated depreciation will be adjusted with the gross carrying amount of the asset. In this, we pass two journal entries. First, we'll eliminate entire accumulated depreciation on the date of revaluation. Journal entry will be accumulated depreciation PP account. Then journal entry for revaluation gain PP account debit to revaluation reserve. If there is a loss, then journal entry will be PL account. If there is a loss, the journal entry will be PL account debit to PP. Okay. Technique number two, gross carrying amount will be restated proportionately to the change in the carrying amount. In that case, what we'll do first, we'll find out the surplus percentage. Surplus means any changes, percentage means we'll compare the carrying amount with the fair value. That will be the surplus. We'll find out surplus percentage, and by that percentage we restate the gross carrying amount as well as accumulated depreciation. So any increase, they can be either surplus percentage or deficit percentage. If there's a gain, surplus percentage; there is loss, then deficit percentage. Okay, with that percentage will either increase or decrease the gross carrying amount, and increase or decrease the accumulated depreciation amount. So journal entry what? Journal entry what? PP account debit to accumulated depreciation, and the difference will be adjusted with revaluation gain that will be transferred to revaluation reserve account. Okay, sir. Yes, sir. Then what about accounting treatment of accumulated gain in revaluation surplus? There are two options. In the first option, entire amount of revaluation surplus will be transferred to revaluation reserve on derecognition of the asset. In the second option, an amount equal to additional depreciation will be transferred from revaluation surplus to revenue reserve during the remaining useful life of the asset. Already we have covered some question based on this. Depreciation, we started depreciation. We have understood it is systematic allocation of depreciable amount of the asset during its useful life of the asset. When to commence? We need to commence depreciation when the asset is ready for its intended use. When to cease? We'll cease the depreciation either on the date when the asset is retired from active use and held for disposal, or when the asset is de-recognized, whichever is earlier. Now for depreciation, we want three elements. One is residual value, second is useful life, and third is depreciation method. Now, from examination point of view, residual value and useful life will be always given in the question. However, useful life can be either in terms of year or any period or in terms of production. Whenever useful life is given in terms of period, means we can apply SLM or RBM. If it is given in terms of production, then we can apply production unit method. It means there are three methods of depreciation as SLM, RBM and PM. Already we discussed about the formula and everything we discussed about this. We are not going to revise that. However, AS then mandate a component accounting for depreciation, means each significant component having a different useful life and different depreciation method will be depreciated separately. Okay, as yes sir, that will be also as per the information given in the question. Then coming to changes in the useful life, residual value and depreciation method, so we should review the residual value, useful life and depreciation method at least at the end of each financial year. Any changes will be changes in accounting estimate will be accounted prospectively as per AS5. Land and building, of course, you have understood. Then we started subsequent costs. Subsequent costs, there are three types of subsequent costs, means any cost which is incurred after initial recognition. One is day-to-day servicing cost, second is replacement cost or inspection cost, and third is any cost which are incurred to increase the efficiency or capacity of the asset beyond its originally assessed efficiency or capacity. The first one, day-to-day servicing costs, are nothing but routine and repair maintenance that will be charged to PL account as an expense immediately. And the last one, which is the cost incurred to increase the efficiency or capacity of the asset, will be always capitalized. Now coming to inspection or replacement cost, if the recognition criteria is satisfied, what is the recognition criteria? That it is probable that future economic benefit will flow to the entity and the cost can be measured reliably. If these two conditions are satisfied, then it will be capitalized, otherwise charged to PL account as an expense. However, from exam point of view, nothing is given, it will be always capitalized. For that, how to do capitalization? So whatever is the carrying amount of the asset, in that we'll first minus, means de-recognize the carrying amount of old part, the old inspection, then we'll add the cost price of replacement. Already we have taken some question based on this. Correct? We have done this much, up to this much. Now coming to impairment loss, already we said impairment loss will be covered under AS28. The detailed discussion about impairment will be covered under AS28. Right now you need to only understand that whenever recoverable amount, now so what is recoverable amount? We'll discuss. If the recoverable amount of the asset is less than carrying amount, the difference will be known as impairment loss. So impairment loss, what is the formula? Carrying amount minus recoverable amount. However, what is recoverable amount, that we'll discuss under AS28. Right now we are not going to discuss anything. Correct? If the recoverable amount is less than carrying amount, the difference will be impairment loss. What AS10 says that any compensation from third party for an item of PP that is impaired should be included in PL when the compensation become receivable. Got this point? Not understood. How you will understand? You will not be able to understand when I read it. So I will need to take some example. So what they want to say? Suppose this is the year when the asset got impaired. So why the asset will get impaired? It is quite possible. Suppose there is one plant and machinery. There was one plant in which fire occurred. So fire occurred, it is an indication that it requires impairment. So it is impaired. Why it will be impaired? Because due to fire, the recoverable amount RA will be less than what carrying amount. So as per AS28, impairment loss will be charged to profit and loss account. Now how to calculate this, that we are not discussing. Means we need to calculate impairment loss of this year and we'll charge the impairment loss to the profit and loss account of this year. Suppose this is 24-25. Now what happened? Because this plant was insured, so you have received some compensation from insurance company. Quite possible. It means it is a compensation from third party for the item of PP which got impaired. Now the question is that impairment loss was charged to PL in the first year and you got compensation in the second year. So this compensation will be transferred to PL in the first year or second year. It is a doubt. So what AS10 says that compensation which has been received from third party for an item of PP which has been impaired will be recognized in the year when it is received, when it is actually receivable. We need to understand when this compensation is receivable. If the compensation is receivable, it will be recognized in PL of second year. If the compensation was receivable in the first year only, then recognized in the PL of first year. We need to understand when the compensation was receivable. So compensation is receivable means inflow is virtually certain. Inflow is virtually certain. When I am saying receivable, it means inflow is virtually certain. So what do you mean by virtually certain? Inflow is virtually certain means what? The chances of that inflow is more than 95%. Chances is more than 95%. However, this will do detailed discussion in AS29. What is virtually certain? What are the chances? What is the meaning of probability? Everything we'll discuss in AS29. Right now, only you need to understand the compensation from third party for an item of PP that is impaired should be included in PL when the compensation become receivable. Receivable means it is virtually certain. It is virtually certain. Got this point? Write down again. Virtually certain. Just write down, refer AS29. Refer AS29. There is one question in ICAI study matter regarding this. However, the chances of that question, I don't know whether it is important, not important. But refer it. Because it is a question of ICAI study matter here. NTDA carried plant and machinery in the books at rupees 2 lakh. These were destroyed in a fire. Similar question. The asset was insured new for old and were replaced by the insurance company with new machine that cost rupees 20 lakh. It was replaced by a new machinery of rupees 20 lakh. The machine were acquired by the insurance company and the company did not receive 20 lakh as cash compensation. So it means there was no cash compensation. It was replaced by new machinery. The cost of the machinery was 20 lakh. State how the entity should account for the same. Correct. So of course, can I say this become gain? Because they will de-recognize the old machine and of course recognize the new machine. The new machine account debit to what? That is again gain is what? PL. So this will be credited to the PL of which year? When this compensation was receivable, means when it was virtually certain. NTDA should account for a loss in SOPL on de-recognition of the carrying value of plant and machinery in accordance with AS10. De-recognition will do. NTDA should separately recognize the receivable and again, because receivable in terms of what? First they will say receivable to PL and then receivable will be in the form of machinery account debit or receivable. In the income statement resulting from insurance proceed under AS29, once received is virtually certain. What I said? Virtually certain. The receivable should be measured at fair value of the asset that will be provided by the insurer. So it will be recognized at fair value. That information, I think it will be 20 lakh only. Okay, sir. Now, whether this question is important, that I don't know. But thora you have understood? Yes, sir. Coming to next point, retirement. Already I discussed this particular topic in one of the questions. Whenever an asset is retired from active use and held for disposal, then it will be measured at lower of carrying amount and NRV. Remember, carrying amount and NRV. But this is not inventory. Because it is held for sale, not in the ordinary course of business. It is held for sale right now, but not in the ordinary course of business. So any item of PP retired from active use and held for disposal. So both the conditions, retired and held. For example, I have a laptop and I purchase a new laptop. The old laptop is now retired, but that is not held for sale. Then this para is not applicable. It must be retired and held for disposal. Then this para will be applicable. Okay, sir. It will be stated at lower of their carrying amount and NRV. Carrying amount, now you know, carrying amount will be after depreciation. Any write down in this regard should be recognized immediately in SOPL. So any loss will be charged to profit and loss account. Means if the carrying amount is 10 lakh, NRV is 9 lakh, so there is a loss of 1 lakh, that will be charged to profit and loss account. Retirement, super easy, understood. Then coming to derecognition, after retirement, the asset will be sold to, it will be derecognized. It is quite possible before retirement, only it is sold. So when to derecognize the asset? What AS10 says that if any one of the following conditions satisfied, the item of PP will be derecognized. So entity shall derecognize an item of PP either on disposal means on sale, or when no future economic benefit is expected to flow, means there is no future economic benefit. Then also it will be derecognized. Correct now. So quite possible at the end of useful life, there is an end of economic life also. Means whenever useful life and economic life are same, then at the end of useful life, there is no value, it cannot be sold. Then no future economic benefit is expected, then also it will be derecognized. So either on sale or when no future economic benefit is expected to flow. On disposal means either on sale or it can be given on finance lease. Finance lease is coming soon in your life. So right now you will not be able to understand what is finance lease. Therefore, I am not giving stress on this part. You can say it is either sold or given on lease to other party. Then also it can be derecognized. For finance lease, refer AS19. Refer AS19 coming soon. So whenever I say refer AS19, you will be able to understand that particular point only when that AS19 is completed. Okay, sir. Yes, sir. Now, how to calculate gain or loss on derecognition? Of course, can I say whenever there is sale of PP, we have to find out gain or loss. On sale of that PP, how to find out? Sale proceed minus cost of disposal. This will be net sale proceed. For example, the sale price is 10 lakh and you incur some commission on sale. You have to pay some commission to make such sale. So 1 lakh is suppose commission. So 9 lakh is the net profit. From there, you deduct the carrying amount of assets sold. So carrying amount of assets, the carrying amount of assets sold on the date of derecognition, we can find out. That can be calculated either under cost model, revaluation model, whatever they have opted. So that can be calculated. Suppose 8 lakh, there is a loss of 1 lakh. This loss will be charged to PL or gain will be also transferred to PL. So this gain or loss will be transferred to PL. So this gain or loss will be transferred to PL, means any loss will not be adjusted with revaluation surplus even though available. So this loss cannot be adjusted with revaluation surplus even though it is available. Okay. So it is not understood. So this gain or loss will be transferred to PL. Now we all know that sale of inventory and sale of PP are two different sales. Whenever we say sale of PP, this is not out of ordinary activities. Therefore, it will not be classified as revenue. But sale of inventory is out of ordinary activities, so it will be classified as revenue. So this is sale of PP. The one clarification has been given. It is not considered as revenue as per AS9 coming soon. So this sale proceed will not be revenue. The sale proceed will not be a revenue. Okay, sir. Yes, sir. Now there is one special point regarding this. For that I need to give one explanation. Example. Suppose you are a car dealer. And you purchase. Car dealer means your business is to purchase and sell the car. You purchase 100 car. Out of 100 car, 80 cars were held for sale in OCB, ordinary course of business. Okay. So can you say it will be classified as inventory? And AS2 will be applicable and will do measurement at cost price or NRV, whichever is lower. Correct. But out of these 100 cars, 20 cars is not held for sale. They are held for rental to other. Now when I am saying held for rental to other, you only say it will be classified as inventory or PP. So can you say PP are item of PP are tangible item which are held for production, held for supply or held for rental to other. And therefore because of definition, it will be classified as PP. And therefore AS10 will be applicable, and therefore you can apply either cost model or revaluation model as the case may be. Cost model or revaluation model. Correct. So even though he was a car dealer, any car which is given on rent, to other will be PP, property, plant and equipment. If you are a dealer of plant and machinery, but plant and machinery is given on rent to other, then plant and machinery which are given on rental to other will be classified as what? PP. And normally can I say it is a routine type of business? Normally can I say, because he was a car dealer, it may be a routine business. Routine business, even though it will not be classified as inventory, because inventory means held for sale, not held for rental. When I say inventory means held for sale in ordinary course of business. So even though held for rental in ordinary course of business, in routine course of business, it will not be classified as inventory, it will be classified as PP. But what happened? As per the management policy, after 2 years, it will be ceased to be rented. And when it will be ceased to be rented, it will be included in inventory, in inventory, and can I say included inventory, but now for sale in OCB. Are you getting what I am saying? It is quite possible the car which was initially given rent to other, now after 2 years, it is ceased to be given rent and included inventory for sale in ordinary course of business. It is a routine part of many business. Correct? Now in that case, now the question arises, it will be classified as PP or inventory. So of course now it become inventory. So what our AS2 says, what our AS10 says, it will be reclassified from PP to inventory. Means will pass one journal entry, will increase inventory and will decrease PP, and this journal entry will be done at carrying amount of PP. Got this point? So it means a reclassification was done from property, plant, equipment, inventory, and this reclassification done at carrying amount. It means no gain, no loss will be recognized on reclassification. No gain, no loss will be recognized on reclassification. Understood? Now, can I say, now there will be sale of such inventory. So what AS10 says that now the sale of inventory, the sale of such inventory will be classified as revenue. This will be revenue in PL. So if the entity is now selling such inventory, then the sale of such inventory will be what? Revenue. Understood? Correct. But if I have car, so can I say car giving means even though I have given that car on rent, but that is not my routine activities. Correct? Understood? So sale of that car will not be revenue. But if this is the case, a car dealer have some car that is given rent initially. Now after some year it is reclassified to inventory. The sale of such inventory will be what? Revenue. Understood? Very good point. Very practical related point, and normally it happens. But this type of question, I don't think so they will ask. But if they ask, you should be able to answer it. Got this point? Yes, sir. What is given now? And is that in the course of his ordinary activities, routinely sales item of PP that it has held for rental to others shall transfer such asset to inventory at their carrying amount when they cease to be rented and become held for sale. I think first para is very much clear. We will do reclassification from PP to inventory account debit to PP. The proceed from sale of such asset shall be recognized revenue in accordance with AS9, accounting standard 9. So revenue will be discussed under AS9, but the sale of such inventory which is reclassified from PP to inventory will be what? A revenue. Understood? What is journal entry for reclassification? Inventory account debit to PP. if there is some accumulated depreciation account, so of course that accumulated depreciation account will be debited, means inventory account debit, accumulated depreciation account debit to PP. So of course when accumulated depreciation, this is the cost price and this is the depreciation till date, so this become the carrying amount of PP. So of course the journal entry means inventory will be reclassified, that PP will be reclassified inventory at the carrying amount of PP, at the carrying amount of PP. Okay sir, chalega? Yes sir, this also done. Now coming to next point, changes in the cost of PP. Changes in the cost of PP means whatever the cost we have recognized on initial measurement, whether it can be changed, whether that cost price can be changed. Normally it cannot be changed, and it can be changed, I will say, only because of one reason. Correct. However, what they say, the cost of PP may undergo changes subsequent to its acquisition or construction on account of changes in liability. Means if liability change, so initially suppose you purchase some item on deferred credit basis, what journal entry you are doing? PP account debit to. Correct now. What journal entry you are doing? PP account debit to payable. And due to some reason after 1 year this payable amount changes. If payable will change, can you see your PP will change? Correct. Or due to price adjustment or changes in liability. But one of the main reasons for changing the cost price is the changes in initial estimate of DRSL. Initial estimate of DRSL. This will be the main reason. Means for that initial journal entry what we have done, PP account debit to provision, and PP account debit to provision. This was the present value of future expenditure. Present value of future expenditure. Correct now. And can is this future expenditure need to be estimated? So in future the estimation might change. The estimation will change. This amount present value will change, and the present value will change. So of course there will be some changes in the cost price of PP. So whenever there is a cost price of PP due to changes in initial estimate of DRSL, what will be the accounting treatment of that? What will be the accounting treatment that we are going to discuss? Correct. Have you understood what is the, till now no question has been given in ICAI study material. No question has been given. Now whether this particular para is important, not important, that I can't say right now. But there is no question in ICAI study material. Whenever I write down no question, so of course for the time being it is not so much important from exam point of view. Because what is the trend in exam? If they want to create a new question in exam, first they will give in RTP MTP. So first they will give RTP MTP, then only they will ask in exam. So there is no question of this nature has been given ICAI resource, but I need to teach. So what they want to say? We are discussing about changes in cost price of asset. This depends upon two situations. The entity has opted for cost model or revaluation model. Revaluation model. Now if there is a cost model, then either there will be increase in liability. Increase in liability means that provision amount will increase. Correct. Now increase in liability or decrease in liability. Correct. Now if there is an increase in liability, so what journal entry will do? Will do PP account debit to liability, means that will be added to the cost price of asset. Means our journal entry will be PP account debit to provision. Provision is also a liability. Okay. So it means that the increase will be debited to the cost price of PP. If there is decrease in liability, it become gain, and that gain will be deducted or reduced from the cost price of PP. Okay. So what journal entry will do? Journal entry will have provision account debit to PP. Correct. But to the extent of its carrying amount. To the extent of its carrying amount. But suppose the decrease is 1 lakh and carrying amount is 90,000. It means we cannot reduce below is 90,000. In that case, any extra gain will be transferred to PL. Any extra gain will be transferred to PL. Okay, so any excess balance, yeah, any excess decrease will be transferred to PL. Understood? Got this point? Correct? Now, because of this decision, can I say the carrying amount will be revised? So what our AS10 says, the revised carrying amount of PP will be depreciated over the remaining useful life. Over the remaining useful life. Understood? चलेगा? Super easy. ठीक है. Means even though you don't have any questions, if you have understood the concept, you can do it by your own. Okay, sir. The revaluation model. The revaluation model entire accounting is based on whatever we have done in subsequent revaluation. Remember? So there are also two. Either there will be increase in liability. Now, if there is an increase in liability, then what will do? The increase in liability means loss. So the loss will be first debited to revaluation surplus to the extent available. Any balance loss will be debited to PL. Means what journal entry will do? Revaluation reserve account debit, PL account debit to PP. चलेगा. Then coming to decrease in liability. Decrease in liability, what will do? So decrease means what? There is a gain. That gain will be transferred to revaluation surplus. What journal entry will do? Now that also depends upon whether previously there was an upward or downward revaluation. Correct now. So previously upward, that gain will be transferred to revaluation surplus. Correct. So what journal entry will do? Sorry, my mistake. Here it will be provision. To provision. My mistake. Correct. Because there is an increase in liability, na? So to provision. Which you can see will not affect the PP account because it is revaluation model. So we can't affect PP account because if we affect PP account, then fair value will change. Okay, yes, sir. So previously upward. So now the journal entry what? Provision. Account debit to revaluation or reserve. Okay, sir. Now previously downward. Previously downward. A minute. No, done. Previously downward. Then what journal entry will do? Previously downward. Then any gain will be first credited to PL to the extent of previous decrease and the balance gain will be transferred to revaluation surplus in that case. What journal entry? The provision account debit to PL to revaluation reserve. Means this accounting statement is totally based on subsequent revaluation accounting whatever we have done. Easy, but because you are doing for the first time, quite possible you are not able to understand. Let me explain again. See, whenever there is changes in the cost price of asset, okay. So if there is a cost model, then whatever adjustment we'll do adjustment with the carrying amount of PB. So any increase means, let me just give you some example. Suppose this is Y0, this is Y1. A simple example. So initially we pass one journal entry PP, account debit to provision, 1 lakh, 1 lakh. Okay. 1 lakh, 1 lakh. Okay, sir. Now at Y1, correct. The provision, either it will become 90,000, it will become 1,20,000 due to reassessment. So we'll do reassessment of provision. Reassessment of provision as per AS 29. Now AS 29 says that because it is an accounting estimate, you will do reassessment. Of course, can is a future expenditure might change. Initially you estimated at some amount, but now you are of the view that it will be at some different amount, quite possible. So reassessment we are doing as per AS 29, and will change. Either it will become, let's say, either it will become 90,000, or it may become 1,20,000. So if they become 90,000, so there is a decrease. So this decrease will be adjusted with the cost price of PP only. Then what journal entry, whatever carrying amount, what will say? Provision, account debit to PP, and in this case it is PP, account debit to provision. So here the amount is 10,000. Here the amount is 20,000. Understood? Have you understood what I want to say? The initially estimated amount was 1 lakh, the present value. Now the present value become 90,000 or 1,20,000. Got this point? Chalega. Now under revaluation model, the entire adjustment will be done with the revaluation surplus. Correct? Means if there is a increase in the amount of provision, the increase means loss. Then our journal entry will be revaluation surplus to the extent available. Balance loss will be debited to PL. So revaluation reserve account debit, PL account debit to provision. But if there is a decrease means gain, so that gains will be transferred to revaluation surplus. Means our journal entry will be what? PP, sorry, provision account debit to revaluation surplus. But if suppose there is a previously downward, the previous decrease has been debited to what? PL. In that case, any gain will be first credited to PL to the extent of previous decrease. Any balance gain will be transferred to revaluation reserve. So in that case, our journal entry will be provision account debit to PL to revaluation reserve. That is the case. But believe me, not so much important from examination point because the question of this nature has not been given in ICAI study material. Now you can read, but I need to cover every point now. What is given? If the related asset is measured using cost model, if the increase in liability, changes should be added to the cost of related asset. If decrease in the liability, changes will be deducted from the cost of related asset. Okay, sir. Note: if a decrease in the liability exceed the carrying amount of the asset, the excess should be recognized immediately in PL. That also I have discussed. I said now, under cost model, if the decrease is more than the carrying amount of PP, then any excess decrease will be transferred to PL. Okay, sir? Yes, sir. The adjusted depreciable amount of asset is depreciated over the remaining useful life of the asset. That also I have discussed. If the related asset is measured using a revaluation model, increase in liability, changes to be directly debited to revaluation surplus to the extent of any credit balance. Any balance loss is recognized in SOPL. Same thing I have said. Revaluation reserve account debit, PL account debit, to provision. Decrease in the liability, changes to be created directly to revaluation surplus, because again it will be directly transferred to revaluation surplus. Journal entry will be provision account debit to revaluation reserve. If the earlier the asset is revalued downward, there was some loss which was already debited to PL. Now it will reverse. It should be first credited to SOPL to the extent of previous decrease, and of course any balance gain will be transferred to revaluation reserve. Understood now? Yes, sir. Done. Chalega. Next point is scope. Already means AS10 we have completed. Okay, sir. Now there are 2 points there: scope and disclosure. Scope might be important for multiple choice question. Multiple choice question. The scope means AS10 is not applicable to which type of PP? It is not applicable to any biological asset. So what do you mean by biological asset? Biological asset means living animal and plant. So any living animal, any living plant, AS10 is not applicable. Which accounting standard is applicable? There is no accounting standard as such right now. So for biological asset, which means any living animal or plant, AS10 is not applicable and there is no accounting standard as such right now. Correct? But what AS10 says, AS10 says that it will be applicable to bearer plant. So bearer plant is also what? Biological asset. But for bearer plant, AS10 is applicable. Means it is not applicable to all biological assets other than bearer plant. Means bearer plant are also biological asset, but for that AS10 will be applicable. So what is the meaning of bearer plant? So that definition is given under AS10. Now whether this is important, that I don't know, but I need to explain. Correct? A bearer plant is a living plant. A bearer plant is a living plant. A bearer plant is a living plant that satisfies 3 conditions. If all the 3 conditions are satisfied, that living plant will be bearer plant and AS10 will be applicable. First condition, it is used in the production or supply of agriculture produce. Let me draw examples. Right now I am discussing about bearer plant. Bearer plant. Okay, sir. Let me draw. One is what? This is mango tree. Okay, sir. And this is banana tree. Okay. This is annual crops. And you might have seen there are some plant which are for attraction, attractive, to make the environment beautiful. This is example of pine tree. We can say pine tree. So this is mango. This is banana. This is annual crop. Annual crops. And this is pine tree. Okay, sir. For example, I have taken. Let me read one by one each condition. First, a bearer plant is a living plant that is used in the production or supply of agriculture produce. That is for production and supply of agriculture produce. In this, if first condition satisfied, in this also first condition satisfied, in this also first condition satisfied, but pine tree, okay, this is not for production of agriculture produce. Means this is not for production or supply of agricultural produce. The first condition not satisfied, therefore it is not a beer plant. Means the last example, pine tree, is not an example of what? Beer plant. Okay, sir. Then second, is expected to bear produce for more than one period. Means is whatever the living plant is expected to produce beer is expected to produce correct now for whatever they are producing for more than 1 year, is expected to bear produce for more than one period. So in this example number, condition number 2, can you see in this mango will produce for more than 1 year. In this also banana will produce for more than 1 year. What is the annual crop? Can you say annual crops will be harvested within 6 months, 7 months, 8 months as per their seasons? So second condition is not satisfied for annual crop, and therefore even the first condition satisfied, it is not a beer plant. It is not a beer plant. Understood? Yes, sir. Next point. What is given? Has a remote likelihood of being sold as an agriculture produce. Has a remote likelihood of being sold as an agriculture produce. You might have seen banana tree is also sold as an agriculture produce. Means the banana tree along with banana is an agriculture produce. The entire banana tree is also an agriculture produce, and that will be also sold as an agriculture produce. It means, can I say the third condition is not satisfied for banana tree? Are you getting what I am saying? It means, but mango tree is itself not an agriculture produce. Have you seen mango tree are harvested as an agriculture produce? No. But banana tree, I hope you have seen in many festival that banana tree are required for that festival purpose. Correct now? In that case, the entire banana tree will be harvested and will be sold as an agriculture produce. Got this point? It means the third condition is not satisfied for banana tree, and therefore it is not a beer plant. It is not a beer plant. You can see all the condition is satisfied only for mango tree, and therefore mango tree is a beer plant. And these all are not a beer plant. Not a beer plant. Are you getting? Are you getting or not? It means for this AS10 will be applicable, but for this AS10 not applicable. Not applicable. For this AS10 applicable. I think thoda तो you are able to understand what is the meaning of beer plant. Means one thing we have understood that all are biological acid. Means in case of biological acid means living animal. Living animal means you have seen cattle, etc. Any sea animal, they are living animal. It is quite possible we are also engaged in maintaining livestock. Engaged in the maintaining livestock. In that case, that is not covered under AS10. Living plant, other than beer plant, all are outside the scope of AS10. Chalega. Can you repeat with me once definition? Yeah, beer plant is a living plant that is used in the production or supply of agriculture produce. Is expected to be a produce for more than 1 year and has a remote likelihood of being sold as an agriculture produce, except for incidental scrap sales. Can I say any item will be one day sold as a scrap? So mango tree, once the useful life will be over, it will be also sold as a scrap. But we are not saying about scrap sales. We are saying as an agriculture produce. So if the plant itself is an agriculture produce, it is not a beer plant. It is not a beer plant. I think you have understood. Some examples are given. The following are not a beer plant. Plant cultivated to be harvested as an agriculture produce. The plant itself is an agriculture produce. For example, tree grown for use as a lumber. Lumber means wood. Correct? Plant cultivated to produce agriculture produce. When there is more than a remote likelihood that an entity will also harvest and the sale plant as an agriculture produce other than as incidental scraps. A banana tree is an example. For example, tree that is cultivated both for their fruit and their lumber. Annual crop, for example, maize and wheat. These all examples are the example for the plant which is not a bearer plant. Okay, correct. So one thing you have understood that AS10 is applicable to bearer plant, but AS10 is not applicable to biological acid which are not a bearer plant. Okay, sir. Now, in that case, one clarification has been given that bearer plant is covered under AS10. So, how to calculate the cost price? The cost price of bearer plant will be calculated in the same manner as we have done for self-constructed asset. Because that will be self-grown plant. Correct now. The cost of bearer plant is determined by using the principle of self-constructed PP. Self-constructed PP. Chalega? Yes, sir. So we are doing about scope. So it is not applicable to biological acid, a living animal or plant other than bearer plant. Understood? Chalega. Next, it is also not applicable to wasting acid. Wasting acid means we have a right to extract coals. Correct now. Coal mines. The coal mine is an example of wasting acid. So for wasting acid, also AS10 is not applicable, including mineral right, expenditure on the exploration for and extraction of mineral, oil, natural gas, and similar non-regenerative resources. So for these two, AS10 is not applicable. Apart from that, AS10 is applicable to all items of PP which satisfy the condition, definition condition, and recognition condition. Okay, sir. Coming to disclosure. I already said disclosure. Normally, they will never ask a question, theoretical question about that. Write something about disclosure of AS10. They will never ask question on disclosure. But there are some disclosure which may be important from exam point of view that I will highlight. Okay, yes, sir. First, general disclosure for each class of PP. So we need to disclose class wise. For example, land is one class, building is another class, furniture is another class, plant is another class, like this. The measurement base use, cost model, revaluation model. Depreciation method use, SLM, RBM, PUM. Useful life or depreciation rate use, whatever the useful life and depreciation rate you have used. In case they are different from those specified in the statute, means Act, means Companies Act. So Companies Act have specified some useful life and rate of depreciation for many class of assets. As per Companies Act. In Companies Act, when you will discuss, you will do Schedule 2 of Companies Act. In that, useful life of each class of PP has been already mentioned. So if you are using useful life or a depreciation rate other than which has been specified in the Act, then the fact need to be disclosed. You should disclose that we are using some other rate of depreciation, other useful life. Okay, sir. Then point number D and point number E are important from exam point of view. That gross book value. Now you know what is gross book value. And the accumulated depreciation with accumulated impairment loss at the beginning and at the end of period. We should disclose the gross book value and the net book value at the beginning and at the end of the year with accumulated depreciation and accumulated impairment loss. A reconciliation of carrying amount at the beginning and at the end of period. We need to also do reconciliation of carrying amount at the beginning, opening balance and closing balance. So this format I have given from exam point of view. So first we should write down all the class of asset given as per the information in the question. Then first we write down gross book value. Here we write down opening balance. Then add addition, means purchase during the year. Then less sale during the year. This becomes the closing balance. So this becomes the closing balance of gross book value. Closing balance of gross book value. Then we'll write down accumulated depreciation opening balance. Add depreciation charge during the year and depreciation adjustment on sale. Of course, whatever PP which has been sold, the accumulated depreciation need to be eliminated. To will eliminate that. Okay. This will become closing balance. Closing balance of accumulated depreciation. Correct. Okay, this is the opening balance. So opening balance, if we'll do gross book value minus accumulated depreciation, that will be the net book value at the beginning. So net book value at the beginning will be A minus C, and net book value at the end will be B minus D. B minus D. So B minus D is the closing balance of net book value. This is a format which might be required in some of the question of financial statement. This you need to understand how to disclose the each item of each class of what PP. Got this point? Yes, sir. Then additional disclosure, there are some more disclosure. For example, any restriction on title and PP plays as security for liability. Suppose any PP is given for liability, we should disclose the fact that it has been given as a security for liability. The amount of expenditure recognized in the course of its construction, for example, capital WIP. Capital WIP means what? Is not finished goods WIP. Capital WIP means what? Any building which is under construction. We're going to say any building under construction is actually not a PP because it will be recognized as PP, means useful life will be commenced from the date when the asset is ready for its intended use. So it will be disclosed separately in your balance sheet. So after PP we write on capital WIP because that is under construction. That is under construction. The amount of any contractual commitment for the acquisition, suppose you have given one commitment that you will purchase one PP after 2 years. So you can't recognize that PP as your asset right now. That is only a commitment given. Any commitment given to acquire any PP need to be disclosed. The amount of asset retired from active use and held for disposal. So any asset which is already retired and which is held for sale will be disclosed separately. Then disclosure related to revalued asset, the date of revaluation, whether independent valuer was involved or not, means whoever has determined fair value, whether he is independent or dependent valuer, means whether they are related or not related party to the management. Okay. The method and assumption applied in estimating the fair value of the item, whatever assumption they have taken to determine fair value, need to be disclosed. Any changes in the revaluation surplus for the period, any restriction on distribution of revaluation surplus to shareholders, of course they are restricted, so that should be also disclosed. So these disclosures are not so much important from exam point of view. So only from exam point of view, this D and E are important. Okay, sir. With this, accounting standard 10 is over. Chalega. Now let me take some few more questions which I think to be done from my point of view. Okay. Come to question number question 5. Come to question 5. An amusement park has a soft opening to the public. Soft opening to the public. Amusement park means it will be a park for the children, etc. Correct now. Soft opening to the public to try run is attraction. Because to try run is attraction. There are, just try to understand what AS10 says. Any asset before it is ready and you are doing trial run, correct? Understood? Any asset which is ready at this point of time, ready for its intended use, and you are doing trial run before it is ready for its intended use, so this will be cost of trial run will be capitalized. Understood now? Now after the asset is ready for its intended use, if you are doing any trial run for only just identifying how much it is attractive to public at large, means amusement park, they have done one soft opening and started trial run only for the attraction to understand how it is attractive to public or not, means it was ready and you have done one trial run, this will be charged to PL. I have already said any cost incurred after the asset ready till the asset is actually put to use will be charged to PL. So you need to read the question carefully. any trial run before the asset is ready for its intended use will be capitalized. But if you see what they are saying, soft opening to the public, if it is open to the public, means it is ready. So soft opening means what? From this we can understand it is ready for intended use. We're ready for intended use, then okay now. To try run is attraction, means that is after the asset ready for its intended use. Tickets are sold at 50% discount during the period, and the operating capacity is 80%, means it is not used in full capacity, only 80%, and they have given discount. The official opening day of the amusement park is 3 months after later, means it is actually put to use after 3 months. Got this point? So these expenses, whatever has been incurred, once the asset is ready for its intended use, or before the asset is ready. So after the asset is ready for its intended use, and therefore it will be charged to PL account as an expense. Got this point? Management claim that soft opening is a trial run necessary for the amusement park to be the condition capable for the operating in the intended manner. Means it will be capable of operating. No, it was already in operation. Already it was ready. Now to see the attraction, you have done one trial run, it will not be capitalized. Got this point? Accordingly, the net operating cost incurred should be capitalized. No, Baba, no. You cannot capitalize it. What is the answer given? The net operating cost should not be capitalized but should be recognized in SOPL. Even though it is running at less than full operating capacity. In this case, 80% of operating capacity. There is sufficient evidence that amusement park is capable of operating in the manner intended by the management. Therefore, these costs are specific to startup and therefore should be expensed as incurred. Very good question. A lot of doubt comes. Madam, these actually doubtful questions. Doubt. Normally, doubt will come in this type of questions. Already, I have explained your doubt. If suppose you read it, now doubt is coming. Again, ask me. But this is a question where doubt will come. But I hope you have understood. 6 done, 7 done, 8 you can do, 9 done, 10 done, 11 done. 11 you can do it. 11 we have done, 12 you can do it. 13 is a good question. Let us do 13. What they are saying? Actual Limited install a new plant, not a qualifying asset. It is not a qualifying asset. Given the question. Not a qualifying asset means what? AS16. As per AS16, borrowing cost will not be capitalized. It means interest expense will not be capitalized. Will not be capitalized. Thank you very much. It is given at its production facility and incur the following cost. Cost of the plant as per supply invoice, it will be capitalized. Initial delivery and handling cost, it will be capitalized. Cost of site preparation, capitalized. Consultant fee for advice on acquisition, capitalized. Interest charge paid to supply against deferred credit will not be capitalized. Estimate of dismantling and site restoration cost 50,000 after 10 years. Present value 30,000. 30,000 will be capitalized. Operating loss before commercial production. Before commercial production, operating loss cannot be capitalized. It cannot be capitalized. The company identified mortar installed in the plant as a separate component and a cost of rupees 5 lakh and other costs were allocated to them proportionately. Means whatever cost incurred, whatever, and a cost of 5 lakh and other costs were allocated to them proportionately. Means out of these 5 lakh belong to what? Motor, and 25 lakh belong to other, and the other cost will be allocated in this proportion only. Other costs will be allocated in this proportion only. Chalega? Yes, sir. The company estimate the useful life of plant and those motor as 10 years and 6 years respectively, and SLM method of depreciation is used. So for plant, the useful life is 10 years. For motor, it is 6 years. At the end of year 4, the company replaces motor installed in the plant at a cost of rupees 6 lakh. Means the cost of new motor which is replaced. An estimated useful life of new motor to be 5 years. Also, the company revalued its entire cost of fixed asset at the end of year 4. And also, the company revalued its entire class of fixed asset at the end of year 4. Of course, after replacement, revaluation will be done. The revalued amount of plant as a whole is 25 lakh. And at the end of year 2, the company decided to retire the plant from active use and held for disposal as a whole for 6 lakh. So it means what is the NRB given? Because decided to retire, so 6 lakh become NRB. 6 lakh become NRB. There is no changes in dismantling and site restoration liability during the period of use. Means there is no changes in DRSL. It means that changes in cost we have done today. That point is not applicable. You are required to explain how the above transaction will be accounted in accordance with AS10. Very good question. In this also doubt will come. And doubt on MRQ. Must revise question before exam. Must revise question. Till now this question has not been asked in exam. Very good question can be asked. How to do? We are doing question 13. Question number 13. First we'll calculate calculation of initial cost. Initial cost of the plant as a whole. As whole means entire plant including motor. What are the given? First, can you give me what is the purchase price? That is given 30 lakh. Okay. Then we'll add all the directly attributable cost. Then we'll add all directly attributable cost. Can you give me one by one? What are given? First is what? Initial delivery and handling cost. And handling cost. How much? It is 1 lakh. Then how much? What is given? Cost of site preparation. Cost of site preparation how much? 2 lakh. Okay, sir. Then there is one consultant fee. Consultant fee is 50,000. Then what? Present value of DRSL. That is 30,000. I think all we have already added. You can do what this is separately. You can just make a total and then you can do the entire total. Chalo, theek hai. So what is the cost price of plant as a whole? As whole, it is how much? 33 lakh 80,000. Now we'll do allocation. We'll allocate this 33 lakh 80,000 to the motor identified as a separate component. Correct now. Can we separate it? Okay, sir. Can we separate it? Yes, sir. So how to separate? Madam. So out of these, how much motor car and balance plant? The purchase price already it is given. How much? 5 lakh it is for motor car. Okay, the balance will be the plant is 5 lakh and 25 lakh. What is the ratio? Ratio is what? 1:5. So other cost in the ratio 1:5. Other cost is coming 3,80,000. So 3,80,000 into 1 divided by 5. It is how much? Sorry. 3,80,000 na? Yes, sir. Correct. 1 minute. 1 minute. And other costs we allocate to them proportionately. Correct only. What will do? It will be 3,80,000 divided by 6. It is coming how much? 63,333 and minus 3,80,000 is coming how much? 3,16,667. So what is the total? So this become the cost price 5,63,333 and this 28,16,667. Understood? This become the initial cost price. Any doubt? Okay, sir. Now we can find out the carrying amount of each plant. Now, what is given the question? You can see it is given the question that at the end of year 4, the company replaced the motor installed in the plant. It means replacement was done at the end of year 4. Therefore, you need to find out carrying amount at year end 4. Okay, sir. Let us find out. Then on point number B, calculation of carrying amount at year end 4. Then on motor, then on balance plant, and if you want to make one column for total, that also you can make or you can avoid also. What is the initial cost? Initial cost already we calculated 5,63,333 and 28,16,667. Total already we know that is 33,80,000. 33,80,000. Now for motor the useful life they have given 6 years. For balance plant the useful life they have given 10 years. It is given the question. Okay. Now we can find out accumulated depreciation. Accumulated depreciation. For this what will do? 5,63,333 into 4 by 6. How much it is? 5,63,333 into 4 divided by 6 is equal to how much? 3,75,555. And for this it is 28,16,667 into it is 4 by 10. 28,16,667 into 4 divided by 10. It is coming how much? 11,26,667. Total will be how much? That is 15,02,222. Got this point. Now can you give me the carrying amount? So carrying amount at year end 4 how much? Is 563 minus 375 is equal to how much? 1,87,778. Then 28,16,667. Okay. Minus 11,26,667 is equal to how much? 16,90,000. And this becomes 33,80,000 minus 15,02,222. It become 18 77,778 was cross-checked by doing a total of this 187,778 plus 16,90,000. Exactly, it is coming same, means we are doing correct calculation. Sometimes what happens, we do wrong calculation. So just do cross calculation so that you can avoid simple mistake. Okay, sir. Now in this, for motor car, what we'll do? We'll de-recognize the carrying amount. We'll de-recognize this and we'll add cost price of new plant. We can add cost price of new plant, that is given how much? 6 lakh. We'll add in this 6 lakh and minus carrying amount of old motor. Old motor. Are you able to understand? Carrying amount already we calculated. 1,87,000. 1,87,778 minus. Here also 1,87,778 minus. Understood. So this become the carrying amount after replacement. Correct. And one thing is clear, that this will be debited to PL. This will be debited to PL. I'll give you the journal entry for this if you want. But what is the carrying amount after replacement? What is the carrying amount after replacement? That is 6 lakh for this, 16,90,000 for this, and the total become what? 16,90,000 plus 6 lakh, that is 22,90,000. Understood? Correct? Yes, sir. Now after replacement they have done revaluation, and the revalued amount is given how much? You can see the revalued amount is given. The revalued amount of the plant as a whole, they have given 25 lakh. One thing is clear, because revalued had been done on the date of replacement. So this includes this 6 lakh only. Means for motor, because this is the date of replacement, so whatever acquisition price will be the fair value. I hope you are understanding. So this is what, if you will take minus less fair value, what is the fair value? Total fair value is 25 lakh. Out of that 6 lakh belong to new motor. So this become what? 19 lakh. Therefore, what is the revaluation gain? So revaluation gain, which will be credited to revaluation reserve, how much? That is 16,90,000 minus 19 lakh, that is 2,10,000. So 2,10,000 will be credited to revaluation reserve. Okay, sir. Understood. I hope you have understood this calculation. Any doubt? Chalega. Means only for your understanding. What will be journal entry for this? Correct. What will be journal entry for this? So of course, can I say you need to add 6 lakh to the plant and you de-recognize the old plant, old motor. So what journal entry? Only for your understanding. Accounting treatment. Accounting treatment for recognition of new motor. What journal entry you will do? Plant account debit, in bracket I am writing new motor account debit to bank, that is 6 lakh, and for de-recognition for derecognition of old motor, what journal entry will do? बताओ. Correct. There is accumulated depreciation. Let's suppose we are maintaining accumulated depreciation account. What is the accumulated depreciation? 3,75,555 to plant old motor. This is only for your understanding. It is not required in the question. So it is 5,63,333. 5,63,333. And difference will be loss. Loss on derecognition transfer to PL. So how much will be transferred to PL? So 563,333 minus 375,555. That is nothing but the carrying amount. Check kar lo. So it has been transferred to PL. Correct. Then on that same date, revaluation of plant. Correct. So revaluation plant can say we need to also now whatever accumulated depreciation, past accumulated depreciation, that need to be eliminated. So this will be also eliminated because we are applying technique 1, technique 2 if you remember. So what journal entry will do? Accumulated depreciation account debit to plant how much? That is 11,26,667. 11,26,667. And then revaluation journal entry, that is plant account debit to revaluation reserve, that is how much? It is 2,10,000. This I have done only for your understanding. Chalega? Okay, sir. Okay. Now what they have asked? What they are saying? At the end of year 8, the company decided to retire the plant from active use and also dispose the plant as a whole. So at the end of 8 years, means again after what? Again after 4 years, because 4 years expired. So at the end of year 8 means after 4 years. But one thing is clear that now the cost price of new motor will be again 5 years. The useful life will be again 5 years. Understood? Yes, sir. Madam. Point number C. Calculation of Now the question is that it was sold, it is retired. So what they have given, at the end of year the company decided to retire the plant from active use and also dispose the plant as a whole for 6 lakh. Means can I say it is retired and sold also? Because also dispose the plant as a whole for 6 lakh, it is sale value given. We retired and on the same day it is sold also. So we will calculate a gain or loss on sale. Gain or loss on sale. The calculation of gain or loss on sale of plant as a whole at year end 8. Once again, it is what? Motor, plant balance and total. So what is the revised carrying amount at beginning of year 5 is after revaluation. So it will be equal to 6 lakh 90 lakh. 6 lakh 90 lakh 25 lakh. Then we'll do less accumulated depreciation for again 4 year. This will be 6 lakh into 4 by 5. How much? That is 4,80,000. And for 19 lakh, what is the expired remaining life? So out of 10, 4 was expired. So now it is 6 year. We will do 4 by 6. 4 by 6. 19 into 4 divided by 6 is equal to this 12 lakh 66,667. 12 lakh 66,667 plus 4,80,000. Total 17 lakh 46,667. Now it was sold for what amount? What is the carrying amount? Carrying amount is what? 6 lakh minus 4,80,000. It is 1,20,000. 19 lakh minus 12 lakh 66,667. It is how much? 6 lakh 33,333 plus 1,20,000 is 7,53,333. 25 lakh minus 17 lakh 46,667. It is coming 7,53,333. For cross check we have done. Correct. Now it is sold to, can you see, entire plant is sold for what amount? Entire plant is sold for 6 lakh. So from my point of view, now 6 lakh should not be bifurcated to these two. But in your ICAI solution, they are bifurcated once again 6 lakh to this amount. That is not required. Because entire plant is sold, we will do sale proceed now. Minus sale proceeds is 6 lakh, and there is a loss of what? The balance amount. So that loss will be charged to PL account. Entire loss will be charged to PL account. Got this point? So there is no need to bifurcate. There is no need to bifurcate. But what they have done? They have bifurcated. Correct now. They have bifurcated this in the ratio of their carrying amount. But that is not required. From my point of view, it is not required. Why we are doing bifurcation? Because we have only plant account. For replacement accounting, we require separate carrying amount. But for sale journal entry, entire plant is sold. If the entire plant is sold, so we will do this minus this. Got this point? And this will be loss on sale. Loss on sale transfer to PL. So how much? It is 1,53,333 is the entire loss which will be charged to PL account. And the revaluation gain on derecognition of the asset, the accumulated revaluation gain will be transferred to revaluation reserve. Random transfer of revaluation surplus to revenue reserve. So what was the amount revaluation gain? 2,10,000. The entire amount will be transferred 2,10,000. If you want to do bifurcation, let us do. So 6 lakh will be allocated in this ratio. So this ratio is what? 6 lakh divided by 7,53,333 into 1,20,000. It is coming how much? This is 95,575 minus 6 lakh is equal to, it is coming 5 lakh 4,425. 5 lakh 4,425. Done. Now if you want to find out individual loss, find out. But that was not required from my point of 1,20,000 minus 95,575. It is coming 24,425 and is coming 1,28,908. From my point of view, it is not required. If you wanted to do, and you can say in this way, okay sir, chalega, but that was not required. But in the solution they have done in this way, therefore I am also doing. Got this point? Now they have given one more alternative solution, that sale proceed we have allocated in the ratio of carrying amount. We can also allocate in the ratio of 1:5 as we have taken for this allocation. Initially we have allocated directly attributable cost in the ratio of 1:5. They are saying we can allocate in that way also. Means, but from my point of view, is to be allocated this ratio, therefore I have taken the best allocation ratio. Chalega. So this has been allocated in the ratio of their carrying amount on the date of sale. On the date of sale. Good question, one. Very good question. Ultimate question till now not asked in exam. Super question. This solution will help you to understand concept also. So must do MRQ just before exam. Okay. I think only one question is left from my point of view. Balance all questions you can do by your own. Means now you don't require my help. Whatever balance question you do by your own. Only one question I will take. This question is also good question. Do by your own. Must do. I don't want to do this question by my, but I don't want to help you, because if you can do this question by your own, means you have understood. Good question. Do it by your own. I mean, like this question is also good. This also you do by your own. When you do. Okay, sir. Now I like to take 25. Question 25. However, this question has been given RTP or MTP. I think it is given RTP. Now once again, this similar question have been asked at CA final level. Now I don't know whether this type of questions would be asked at CA inter level or not. Now let us read the question. But very interesting question. Means I will say practical scenario question. But it is a question of CA final level, not CA inter level. Given in the RTP of CA inter also. ABC Limited is setting up a new refinery outside the city limit. In order to facilitate the construction of the refinery and its operation, ABC Limited is required to incur expenditure on the construction and development of railway siding, road and bridge. So ABC Limited incur the expenditure on the construction development, it will not have ownership right. Means there is no ownership right on this item, and they are also available for the use to the other entity at public address, and other entity can also use it for their own purpose. Can ABC Limited capitalize the expenditure incurred on this PP? Means what actually happened? Let us understand. I am explaining question number 25. So there is one refinery. Suppose there is factory or refinery, and suppose this is the premises of this entity. Correct? Now what happened? For transportation purpose, they want railway tracks. Suppose this is the railway station for transportation of the goods. They will use the goods train for transportation purpose. But this is actually 25 kilometers from their premises, and the national highway is also suppose 50 kilometers from their premises. Quite possible. It means they want one road to connect the factory with the national highway, and therefore they have constructed road. The road outside their premises, and the expenditure incurred is, suppose, let's say 30 lakh. And they have also constructed one railway siding. This is known as railway sidings. Railway siding, so that the goods train will come and will use this railway siding, and they will reach, the goods train will directly reach to the premises of factory of this entity. They will unload the goods, or loading will be done, and then again they will go back. So transportation become easy. And suppose railway siding, it is 50 lakh. Now the question is that whether this road expenditure and railway siding expenditure should be capitalized or charged to PL as an expense. Before accounting standard 10, we used to charge it to profit and loss account because we used to say that even though there is some future economic benefit, but there is no control because this road can be used by any other entity, by public at large. Similarly, this railway siding can be also used by any other entity. Correct now, and therefore there is no control, and therefore this expenditure will be charged to PL account. Correct now, as an expense. But after AS10, now as per AS10 revised, this is AS10 revised, whatever we are doing, this will be capitalized. This will be capitalized, and this will be also capitalized. Both will be capitalized, and will be added to the cost price of refinery. The reason is that what AS10 says that AS10 says that to the cost of an item or PP will be recognized as an asset if two conditions are satisfied. It is probable that future economic benefit will flow to the entity and cost can be measured reliably. But one doubt came, the cost of an item. So item means what? It is single item or group of item? Because normally what happens, just try to understand, single item sometimes cannot provide future economic benefit. For example, if you see this classroom, you only say, means my studio, you only say whether single camera, only camera can provide future economic benefit. No, means I can use camera only with my PC, only with my iPad. Then there are many other items which together, if I use, then I can derive future economic benefit. It means single item cannot provide future economic benefit. Are you getting what I am saying? So cost of an item, so item is a single item or group item, that is not given in AS10. Means unit of measurement is not given, and therefore judgment is required. And as per practical judgment, it is now understood that it should be either single item or group of item, as the case may be. Means as per the circumstances. For example, if I am thinking of a studio, so of course one single item cannot provide future economic benefit. A group of items together can provide future economic benefit, and therefore we should consider the entire group of items for the purpose of recognition criteria. Similarly here, if you see the refinery or whatever asset has been constructed here cannot provide future economic benefit until unless road is constructed, railway siding is constructed, because transportation is possible only because of road and railway siding. So if you have constructed refinery, what will do with refinery if there is no transportation? It means, can I say this road, this railway siding together with this refinery will provide future economic benefit, and therefore we need to apply recognition criteria to entire group as a whole. And if we apply that, then that two conditions will be satisfied, and then only we can capitalize it. Otherwise, the entire cost of refinery, the condition will not be satisfied. Are you getting what I am saying? Now, what if you apply AS10? We apply the judgment, and therefore this road and railway siding, the cost will be capitalized. For depreciation purpose, we need to use component accounting. Means this road will have their own useful life. This railway siding will have their own useful life. This refinery will have their own useful life. Any other plant and machinery installed in this refinery will have their own useful life and will depreciate as per component accounting. But entire item, means this road, railway siding, even though there is no control, it will be capitalized due to the recognition criteria given under AS10. Understood this point? This is only given, you just read it, you will be able to understand. This entire discussion has been done in one para, which actually initially I have not read. But now I will read, you will be able to understand. One point is given. If you come to this point, unit of measurement for recognition of PP and aggregation of individually insignificant items. Correct. The unit of measurement for recognition, that is what constitutes an item of PP, is not prescribed under AS10. Thus, judgment is required in applying the recognition criteria to an entity's specific circumstances. Means we will apply judgment as per the circumstances. It may be appropriate to aggregate individually insignificant items such as mold, tools, and dies, and to apply the criteria to an aggregate value. For example, in this studio, there are many small items. For example, tube lights, Correct. There are many other what item. For example, fixtures are there, switchboards are there. So they are very insignificant item. But can you say without light, I can't record the classes. Without switchboard, that is also required. So can you say we'll combine this insignificant item to all the studio item and then apply recognition criteria, and therefore that will be capitalized. Got this point? And same this para has been applied in question number 25. Question number 25. If you read now, you will be able to understand. Got this point? Just read it, you will be able to understand. But whether it is important, not important from CA inter point of view, that I don't know, because it's given RTP, therefore I am doing. With this accounting standard 10 is completed from my point of view. Of course, we'll take a small break. After break, we'll start a new accounting standard. I hope AS10 you have understood each and every question with entire concept. Okay, sir, we'll meet after break. Yes. Can we start once again, everyone? Okay. Now we'll start one more accounting standard, AS26, intangible asset. Already I have informed you that first we'll take all the accounting standard related to asset. We have already completed inventory AS2, then property, plant and equipment AS10, now intangible asset AS26. Now once the name comes, intangible asset, then first what do you think about intangible asset? What definition comes in your mind? I know what definition will come. You will say intangible assets are those assets which cannot be seen, which cannot be touched, which cannot be felt. Correct now? I will say maha bakwas definition. I don't understand why this definition has been given for intangible asset. But whenever this definition was given to you, that time you were small kid. Now you are grown up. Now you need to understand the exact definition of intangible asset as per AS26. Okay. So that definition, whatever you were knowing, that intangible asset are those assets which cannot be seen, which cannot be touched, which cannot be felt. Okay. Up to class 11, 12, up to CA foundation. Okay. But now we need to understand what is the definition of intangible asset as per AS26. Before I give you the definition, let me ask you one question. Let me ask you one question. And the question is what? Just try to understand. We are doing AS26 intangible asset. What is the question? That we know one journal entry for credit sales, debtor account debit sales. Everyone know? Debtor, for example, Mr. Ram, account debit to sales. Means I am not asking journal entry. And you all know that this debtor is an asset. Now my question to you, this asset is this debtor is a tangible asset or intangible asset? Correct. Now this is my question to you. When I say debtor, suppose Mr. Ram is an asset, no doubt about that. But whether it is a tangible asset or intangible asset. Now if you are saying it is a tangible asset because it can be seen, it can be touched, correct now. It is 100% wrong. It is not a tangible asset. It is 100% wrong. Got this point? Now when I say debtor, debtor means what? Debtor means that we have not purchased the physical body of Mr. Ram. Am I right or not? So debtor means we have a right to collect cash from Mr. Ram. So debtor represents right, and that right is an intangible item. The right is an intangible item. That right is not a tangible. The right is intangible, and therefore this debtor is an intangible item, but it is not an intangible asset. Oh, what you said, sir? So this data is an intangible item, but all intangible items are not intangible asset. It is not an intangible asset as per AS26. As per AS26. So we need to now understand what is the actual definition of intangible asset as per AS26. Now why? Now why? Just try to understand why this debtor, even though it is an intangible item, why it is not an intangible asset? That doubt will now come. Now, of course, if I will say data is an intangible item, now one doubt is coming in your mind. Why such intangible item is not an intangible asset? The answer is given in definition. So we need to now discuss the definition given under AS26. Why I started with this example? To inform you the importance of definition in our life. In our life means in CA life, not accountant. We are not accountant. We are chartered accountant. So now we need to understand the importance of definition. Therefore, I have taken some time for definition of inventory. I have taken some time for definition of PP. Now I will take some time for definition of intangible asset. So what is the meaning of intangible asset? So intangible asset or asset? Of course, it is an asset. So now we have understood asset can be inventory, asset can be property, plant, equipment, asset can be intangible asset. So of course, intangible asset or asset. When I say asset, asset means what? Asset means future economic benefit and control. If these two conditions are satisfied, then any resource will be an asset. Correct? So intangible asset are asset which are identifiable, identifiable, non-monetary, without physical substance. It means now I need to explain what is the meaning of identifiable, what is the meaning of non-monetary, what is the meaning of without physical substance. I hope you have understood without physical substance. Of course, can I say all intangible assets are without physical substance? Tangible assets are having what? Physical component, physical substance. For example, if I say property, plant, equipment, correct, so that has some physical substance. Got this point? So of course intangible asset will have no physical substance, but we'll discuss about this also. But can I say we need to now understand what is the meaning of identifiable, what is the meaning of non-monetary, and then what is the meaning of without physical substance. These are three characteristics of an intangible asset, correct, which are held for use in production or supply of goods or services, or for rental to other, or for admin purpose. Same purpose was given for PP. So PP are also held for same purpose. Intangible asset are also held for same purpose. Means can I conclude like this? Just try to understand. Any intangible asset held for sale in ordinary course of business. Any intangible asset which are held for sale in the ordinary course of business. For example, I am a dealer of software. Correct. So software is what? Intangible asset. So if I am a dealer, I buy and sell software, then that software is my inventory. It is as simple as if I am a dealer of machinery, then machinery is my inventory. Got this point? So this become my inventory. Inventory means what? Which AS? AS2. And therefore this is outside the scope of this chapter. Correct? So any intangible asset which are held for sale in the ordinary course of business is outside the scope of this chapter, because that will be covered under AS2. Means can I say any intangible asset which are held for either production or for supply or for rent or for admin purpose, that is actually intangible asset, and AS26 will be applicable. AS26 will be applicable. Got this point? Correct? Yes, sir. I think in this no doubt you have understood. Now I need to explain, means you will be able to understand definition only when we are clear about identifiable, non-monetary and without physical substance. So what is the meaning of identifiable? Means which can be easily identified. But before we go to that, let me define asset once again. Already we know about that, but because it is given, let us understand once again. Asset is a resource controlled by the entity as a result of past event. Chalega. Controlled by the entity. Control. And from which future economic benefit are expected to flow to the entity. Already we know. Control means what? Power to obtain future economic benefit flowing from the underlying resource. And also we can restrict the access of other to those benefits. Means we can deny those benefits to others. We have a right to restrict other person from those benefits. It means we control such asset. Okay. Yes, sir. Got this point. We understood future economic benefit. We understood control. Now let us come to identifiable. Identifiable means what? What AS26 says, that any asset which satisfy any one of the following two conditions. They have given how many conditions? two conditions, any one of these two conditions are satisfied, it will become an identifiable asset. So an asset is identifiable if any one of the following conditions is satisfied. First, it is separable, means any asset which can be separated from the business, and can be sold separately, can be given on rent separately, can be transferred to other person separately, can be given on rent to other person separately. It is identifiable. It is identifiable. Got this point? Are you able to understand? For example, if I have camera, so I'm using this camera in the business, but this camera can be sold. Correct now? Even though business is not sold. Correct now? Are you getting what I am saying? So camera can be sold separately. Therefore, it is an identifiable asset. So any asset which can be sold separately, which can be licensed separately, which can be given rent separately, which can be transferred separately, which can be exchanged separately, are identifiable. Are identifiable. Got this point? Very important. So which can be separated from the business. Just try to understand. If I say goodwill, just try to goodwill. Can you sell the goodwill of business without selling the business? No, it is not possible. Can I say like this? Buy my goodwill, but don't buy my business. It is impossible. Means goodwill can be sold along with business. Along with business, it cannot be sold separately from business. Therefore, can I say goodwill is not identifiable because of first condition? Let me come to second condition. But can I say it is not separable from business? Goodwill cannot be separated from business. It cannot be sold separately. It cannot be given on rent separately. But if I say brand can be sold separately. For example, right now I have my brand Chiranjeev Jain classes. So even though I have not sold my business, I can transfer my brand. So brand will become an intangible asset as per identifiable condition is considered. Okay, sir. Correct. Any other intangible asset, whatever example, copyright, patent, trademark, will be identifiable. Will be identifiable because it can be separated from business and it can be sold separately, it can be given rent separately, it can be transferred separately, it can be exchanged separately. Got this point? First condition, thoda you are able to understand. Second condition, that such asset arises from contractual or any other legal right. Even if these rights are non-transferable, even though it cannot be separated, okay. But if it arises from contractual or any other legal right, then can I say it is also identifiable. For example, we acquired a license to run a cinema hall. So there is a contractual right that I can use this particular right to run cinema hall for 5 years, and within this 5 years it is non-transferable. Then also that become our intangible asset. To any asset which arises from contractual or any other legal right, even if such right are non-transferable, it will be identifiable. It can be in the form of franchisee right or any other right. Got this point? So for example, you purchase a right to play my video recording in your classroom. Right. So we have done one contract. And suppose I put one restriction that you can't transfer this right to any other person. It is non-transferable. Then also it will be an identifiable for you. Got this point? Yes, sir. Yes, sir. Correct. Now, just try to understand one point I just want to say. So you can see when I say goodwill is not identifiable. Correct. If it is not identifiable, because can I say any one of the two conditions is not satisfied, it is neither separable nor it arises from any contractual legal right. Neither separable nor arises from any right Got this point? So goodwill is not identifiable. It means, can I say, it does not meet the definition of intangible asset. It does not meet the definition of intangible asset. Oh my God! Now from bachpan say you know one example. Goodwill is an example of intangible asset. Now I am saying it does not meet a definition of intangible asset. No one will say this. Believe me, goodwill, as per definition of AS26, is not an intangible asset because it is not identifiable. Because it is not identifiable. Just try to understand. This is the concept. Whatever I am teaching, this is the concept. You should understand whatever I am teaching. As per definition given under AS26, goodwill is not an identifiable asset. Therefore, it will not meet the definition of intangible asset. Correct? Then why goodwill is shown in the balance sheet under intangible asset? So there is one exception to this rule. So we have one exception. We have an exception to this rule. We have an exception to this. Correct? What our AS26 says that, I am just giving you at very early stage, because this, if I will not explain right now, you will say, sir, goodwill is not an identifiable asset, then why it is an intangible asset? So I am saying it will not meet the definition of intangible asset. Now why it is shown in the balance sheet under intangible asset? For that we have an exception. Now what AS26 says that internally or self-generated, better write out self-generated. Self-generated intangible asset, yes, self-generated goodwill cannot be recognized. Cannot be recognized because it is not an intangible asset only. But what AS26 says that any purchase goodwill arising in case of amalgamation, because in amalgamation we acquire business, and when we acquire business, with that business we also acquire goodwill. Got this point? And because of AS14 we recognize goodwill. We don't recognize goodwill because of AS26. We recognize goodwill because of AS41. AS40, that is an exception to this rule. So purchase goodwill can be recognized if can be recognized in case of amalgamation as per AS14 and AS21 coming soon in your life. Got this point? So this we are recognizing because of AS14, AS21. We are not recognizing as per AS26, means goodwill is outside the scope of this chapter. So when I am saying intangible asset, goodwill is outside the scope of this chapter. We are not recognizing goodwill because of AS26. There is one exception. Our amalgamation means AS14 says because we are acquiring business, with business also we acquire goodwill, and because that is a goodwill will come in the balance sheet, and just try to understand, because goodwill is what? Not a tangible asset. Goodwill is not a tangible asset. So as per the requirement of what? Disclosure purpose, means presentation purpose, goodwill is shown in the balance sheet under the head intangible asset. So for presentation purpose, goodwill is shown under intangible asset, because we can't disclose under what? We can't disclose under what? Property, plant and equipment. However, once you come to CA final, goodwill will be separately disclosed in the balance sheet apart from other intangible assets. But abhi right now, as per CA inter, for presentation purpose, goodwill is shown under intangible asset. This is for presentation purpose. Because definition is something different. Presentation is something different. Got this point? What I want to say, if somebody asks you whether goodwill is an intangible asset, you will say no. Why? Because it is not identifiable. It is not identifiable because it cannot be separated from business. It cannot be sold separately. It cannot be given or rent separately. Therefore, it is not identifiable. Therefore, goodwill is not an intangible asset. It is shown in the balance sheet under the head intangible asset if it is acquired in case of amalgamation. If it is acquired in case of amalgamation. Have you understood this much? Thoda sa technical. Believe me, because now I am saying the point which you have never heard. And sometime what happened at different point, if I'll say, you will say, what is this, sir? And achanak se you'll think it is complicated. It is not complicated. I am teaching you correct thing as per the definition of AS 26. Okay, sir. Now I hope you are understanding the importance of definition in our life. Importance of definition in our life. Okay, sir. Chalega. Yes, sir. So, identifiable you understood? Identifiable you understood. Can you repeat with me? An asset is identifiable if any one of the following conditions are satisfied. An asset is separable, that is capable of being sold separately, transferred separately, licensed separately, rented separately, or arises from contractual legal right, even if these rights are non-transferable. Now coming to non-monetary. Non-monetary means any asset which are not monetary asset. So what is monetary asset? Means to understand non-monetary, we need to understand what are monetary asset. So monetary asset are money held in the form of money. Money held is in the form of money. Correct? An asset to be received in fixed or determinable amount of money means it is nothing but receivable which will be received in cash. So in simple what I will say, any receivable to be received in fixed amount of cash, receivable to be received in fixed amount of cash is what monetary asset. The best example, debtor. A debtor is receivable which will be received in fixed amount of cash, and therefore debtor is an example of monetary asset. Now debtor is an intangible item, but it is a monetary asset, and therefore it is not an intangible asset because intangible assets are non-monetary assets. Because intangible assets are not to be received in fixed amount of cash. PP, property, plant and equipment, also non-monetary asset. So property, plant and equipment does not represent any fixed amount of cash. Similarly, intangible asset also does not represent any fixed amount of money, fixed amount or determinable amount of money. Means to include this word in the definition, what is the intention? The monetary assets are outside the scope of this chapter, even though they are intangible item, and therefore they said intangible asset cannot be monetary asset. Intangible asset are only non-monetary asset, Got this point? Detailed discussion about monetary asset with lot of example. We'll do not right now. We'll do under AS 11. So just write down refer AS 11. We will do lot of example in detail, monetary and non-monetary asset when we'll do accounting standard 11. Right now this much only. Okay, sir. So we have understood identifiable. We have understood non-monetary. Now without physical substance. One thing is clear, that intangible asset does not have any physical substance. But can I say every intangible asset will be stored in some device? For example, if I purchase any software, the software will be stored either in pen drive, in hard disk, in CD, etc. And that CD, pen drive, hard disk will having some tangible component. So it will be stored in a device which will be tangible. So if you purchase software, so software is not coming what alone, it is coming with physical component. The question arises, when we purchase software with CD, whether it is tangible or intangible. So what AS26 says that the cost price, the cost of intangible component in that is significant in relation to the cost of tangible component, and therefore it is intangible asset, not tangible asset. Got this point? So every intangible asset are stored in a storage device which are tangible, but the cost of tangible portion is insignificant as compared to cost of intangible part, and therefore entire asset will be intangible asset. Entire asset will be intangible asset. Okay, sir. Whenever any intangible, for example, right now I am recording my classes. So whatever classes I am recording, the output of that recording is my intangible asset. But that is stored in what? Hard disk. Correct now. That is stored in hard drive. So that is what tangible, but the cost of my recorded class are significant is compared to the cost of hard disk or pen drive. And therefore we will call it, it is my intellectual property, it is my intangible asset. It is my intangible asset. Okay, sir. I hope you are able to follow me. Correct. But sometimes what happens? Sometimes what happens? We purchase laptop with operating system. Now, in that case, just right when we purchase laptop with operating system, so laptop is tangible, operating system is intangible, and both costs are significant. Both are significant in relation to cost. Both are significant component. So in that case, we'll apply AS10 or AS26. One doubt will come. So when you purchase laptop, you ask the vendor what is the cost price of operating system. They will say 50% is operating system, 50% is tangible component. Because without operating system you can't run your laptop, you can't use laptop, and without laptop you can't use operating system. So both are significant. So in that case what we'll do, so what AS26 says that if both tangible and intangible component are significant, correct, but intangible component is an integral part of the related tangible component. Integral means without means intangible component is integral part of what? Tangible component. Means that intangible component cannot be used without tangible component. Means that can be used only in that tangible component, then it become integral. For example, if I say body, the bones are integrated in the body. Are you getting? So if suppose there are only bones, what do you do? It requires body. So we say human body. Will not say it is human bones. We'll say human body now. We will apply human body AS. Are you getting? In that case, when I say intangible component, operating system is an integral part of laptop, we apply AS10 to the entire asset together. Correct? So if intangible component is an integral part of related tangible component, entire asset is treated as PP, and we apply AS10. For depreciation, apply component accounting. If the operating system has a useful life different from the useful life, and that is the difference from the useful life of tangible component, then we need to apply component accounting for depreciation. That is okay. AS10 already we have understood, but we need to apply AS10 in this. We will not apply AS26. Got this point? But sometimes what happens? If I purchase tangible with intangible component might not be integral part of that tangible component. In that case, what AS26 says that apply AS10 for tangible, AS26 for intangible. For example, if I purchase tele software with a laptop, now tele software is not an integral part of tangible component. We can use that laptop without tele software, and that tele software can be used in another laptop also. It means, can I say both can be separated, and therefore we can apply different AS to tangible and intangible component. In this case, if intangible component is not an integral part of related tangible component, intangible component is treated as intangible asset and tangible component is treated as PP. Till now, no question has been asked from this. But with MCQs, from my point of view, in MCQs, this type of question can be asked. Okay, sir. This was the definition part. How was the definition? I hope you have understood. Can you repeat with me? Intangible asset are assets which are identifiable, non-monetary, without physical substance, and which are held for production or supply of goods or services, or for rental to other, or for admin purpose. Now, anyone, if they are asking the definition of intangible assets, say this definition. Don't say which cannot be seen, which cannot be touched, which cannot be feel. That is, I will say, bakwas definition now. Chalega. Now, once definition is completed, then we'll go to what? We'll go to recognition criteria. Same to same recognition criteria, whatever we have done under AS10. Means with AS10 now, AS26 will become super easy, because already some discussion we have done under AS10. The recognition criteria, same to same, you can see same two conditions are given. An intangible asset will be recognized if and only following two conditions are satisfied. If it is probable that future economic benefit that are attributable to the asset will flow to the entity and cost can be measured reliably. Both the conditions need to be satisfied. In case of property, plant, and equipment, I have said that cost can be measured reliably. That condition is always deemed to be satisfied for tangible asset. But for intangible asset, this second condition is also very, very important. There might be a situation where you are doing self-generation of any intangible asset and you are not able to identify the cost. If you are not able to identify the cost, what AS26 says that it cannot be recognized as an intangible asset. So both the condition, probable future economic benefit and cost, can be measured reliably. I'll give you my example. Some year before, I will say, when I started my teaching career, so I launched one website. I was supposed to launch one website for CA student, to help CA student. Correct? And I was supposed to develop that website. Already some investment was done. Then after some investment, what happened? Due to some reason, I was not able to complete it. Due to some reason, I was not able to complete it. Okay. Due to some financial problem. Okay. It was at an initial stage when I started my CA coaching classes. That means I will say 15 years before. Correct. So I was supposed to launch one website to help CA student. Means everything will be in that particular website. That time there was no such website in India. Are you getting what I am saying? So idea was very good and it was going to be launched, but due to some reason I was not able to launch it. And there was a delay by 10-12 months. Means we delay the launching of that website by 10 to 12 months. Then what happened? Suddenly we got a news that a similar website came in the market with the same idea, and that was total hit. Now I understood that even though if I launch that website, I will not get any future economic benefit. It means whatever expenditure I have incurred in my website, that cannot be recognized as an intangible asset, because now I am not going to launch that website. Why? Because there is no future economic benefit, and therefore that expenditure cannot be recognized as an intangible asset. Understood what I am saying? So both the conditions need to be satisfied. There must be future economic benefit, probable future economic benefit, and cost can be measured reliably. Right? Understood? Yes, sir. Now coming to next point, recognition of an expense. For that, let me give you some explanation. Correct? Recognition of an expense. बचपन से you are doing one thing कि expenditure are of two types. Expenditure are of two types. One is known as revenue expenditure. Revenue expenditure. Just try to understand, when I say expenditure, expenditure does not mean expense. When I say expense, expense will be charged to PL, but expenditure may be an expense, or it can be an asset. So when I say expenditure, expenditure is a wider term. Correct? Expenditure is a wider term. Correct? So expenditure can be an expense. If expense, charged to PL account. If an asset, it will be shown in the balance sheet. In the asset side, yes, sir. Expenditure are of two types. Revenue expenditure. What do you mean by revenue expenditure? Revenue expenditure means, just try to understand, this definition is not a part of accounting standard. But right now, I'm just giving definition as per my experience. Okay. And this has not been defined what is revenue expenditure, what is capital expenditure. Nowhere it has been defined. Everyone is teaching as per their knowledge. As per their knowledge. And reference book is not a part of accounting standard. If you are getting this definition in some reference book, so that is their experience, their knowledge they are sharing. Okay. Are you getting what I'm saying? So this is not a part of accounting standard. So whatever I'm teaching, this is not a part of accounting standard. This is not a part of accounting standard. When I say revenue expenditure, what you have done in your bachpan? The revenue expenditure are those expenditure which provide benefit for a particular accounting period. For a particular accounting period. So any expenditure which provide benefit for a particular accounting period, that is known as revenue expenditure. And if benefit is derived, benefit already derived, then it will be an expense. Then it will be an expense. And benefit which will be derived in future. Benefit will be derived. Then we call it an asset. Means it is wrong to say that revenue expenditure will be always charged to PL as an expense. Just try to understand, every expenditure will be charged to PL as an expense one day. Means when I say plant and machinery, so they are also charged to PL as an expense by way of depreciation. Correct now? So every expenditure will go to PL one day. Once the benefit derived as per matching concept. If you incur some revenue expenditure, benefit will be derived in future, so that is an asset. And therefore we open one account that is known as prepaid expense. So this is nothing but prepaid expense. The prepaid expense means what? Benefit is yet to be derived, and therefore it is an asset, will be shown in the balance sheet as an asset. Correct? Any doubt? Bolo. I think this you have understood and you don't require any explanation. I hope whatever I have said, you are okay with that. So when I say revenue expenditure, what is the other expenditure? Of course, in your mind, one word is coming: capital expenditure. Now, what is the definition of capital expenditure? What do you say? Think, what is the meaning of capital expenditure? I know what definition you will give. So I am repeating on your behalf. I am saying on your behalf. You are saying capital expenditure are those expenditure which will give benefit for more than one accounting period. Yes or no? Means any expenditure which will give benefit for more than one accounting period are capital expenditure. Let me ask you one example. Suppose, just try to understand. Suppose I enter into one contract to provide one service. Means I have done one contract to provide a service of 5 years. And because of that reason, I hired one employee for 5 years. Correct? And as per contractual agreement, I paid 5 lakh today only for how many years? 5 years in advance. Correct? Normally it does not happen, but chalo, example is example. So I received one contract to provide one service for 5 years. Because of that reason, I hired one person who will help me in providing that services, and I will pay him. I already paid 5 lakh for the 5 years. I mean, this is for 5 years. Now this is an expenditure. This expenditure will give benefit for 1 year or more than 1 year. More than 1 year. My question to you all, whether it is capital or revenue expenditure. It is capital or revenue expenditure. Now most of you will be now confused, because as per definition, if any expenditure which will provide benefit for more than one accounting period, then that is capital expenditure. But in your example, you don't have such list. When I say capital expenditure, in your mind what will come? In your mind, property, plant and equipment will come, building, land, furniture, intangible asset, patent, copyright. This example will come. This example no one has given. But can you say this? Now you say it is a revenue expenditure or capital expenditure. Can you say it provide benefit for a particular accounting period and this 5 years is defined? Means we know that benefit will be derived in 5 years. There is particular accounting period and therefore we call it prepayment. We call it prepayment. Correct? And prepayment, normally we call it revenue expenditure. Why? Because this is for particular accounting period. Particular accounting period. And what was the definition I have given? You get definition which give benefit for a particular accounting period. And you know, all property, plant, equipment, land, building, etc. does not provide benefit for a particular accounting period, because in that case we need to estimate useful life. We don't know for how many years it will give benefit. For example, I am using camera. I don't know for how many years it will give benefit. So it is not for a particular accounting period. It is not for a particular accounting period, and therefore, can I say in revenue expenditure will not give an example of building, furniture, because their benefit received, but not for a particular accounting period. Got this point? I will say from my point of view, expenditure can be either expense or asset. In simple, what I will say, benefit received, expense. If benefit not received, it is an asset. Correct? And there is no miss from my point of view. What is capital expenditure? From where this word came, I also don't know. Therefore, I don't want to use that term, capital expenditure. From there, only doubt came. Capital expenditure. Correct now. So I will say any expenditure which is not a revenue expenditure will be other expenditure. Will be other expenditure. So any expenditure which is not a revenue expenditure means we do not provide benefit for a particular accounting period or other expenditure. Now this other expenditure can be either on tangible item, or it can be on intangible item. Intangible item. Just try to understand. I have written item. I mean, right now I have not mentioned intangible asset. So when I say intangible item, then it is not an intangible asset till definition and recognition criteria is satisfied. Now when I say tangible item, so either it will be inventory, it can be inventory, apply AS2, it can be property, plant and equipment, apply AS10. Right now I am not discussing about tangible item, so we are not focusing on that. I am not focusing on tangible item. But if it is on intangible item, then AS26 will be applicable. Now AS26 says apply definition and recognition criteria. So we need to apply definition and recognition criteria as per AS26. Apply it. If both the conditions, both the criteria satisfied, then it will be an intangible asset. Recognize it as per AS26. Am I right or not? Are you getting? Chalega? Okay. So what I was saying, if satisfied, both are satisfied, definition and recognition as per AS26, as per AS26. So now either satisfied or not satisfied. If I am saying satisfied, then recognize as intangible asset. as per AS26. But if I am saying not satisfied, either definition not satisfied or or recognition criteria not satisfied, not satisfied. Correct. Then it will be charged to PL as an expense immediately. Then it will be recognized as an expense immediately. Recognized as an expense immediately. It's very important. Got this point? This is the rule. And this only AS26 want to say कि any expenditure on intangible item, any expenditure on intangible item, if it does not meet definition as well as recognition criteria, then recognize such expenditure as an expense in the year in which it is incurred. In the year in which it is incurred. This is the para given under AS26. Therefore, I can't call it capital expenditure. If I am saying any expenditure which is not revenue expenditure or capital expenditure, can is the wrong definition, because that can be also an expense. Are you getting? So normally in your bachpan, whatever has been taught, there are two type of expenditure: revenue expenditure, capital expenditure. Somehow it is wrong. Somewhere it is wrong. Okay, chalo, theek hai, but that time you were kid. Now you are mature enough to understand all these things. Therefore, I am teaching. And now, then when? If I am not teaching right now, then when to teach? Whether when you will come to CA final, then I will teach. No, it is a part of the inter syllabus. So I will teach right now only. Anyone who is not teaching, that I will say is guilty of professional misconduct in teaching profession. Understood? Are you able to understand? Let me take one example. Small example we'll take. For example, if I say advertisement expenditure. Now there are two type of advertisement expenditure. One is known as sales promotion expenditure. That is what for a particular accounting period. To promote for the promotional activity on a yearly basis. That is sales promotion. For example, to promote any batch, I will do some promotion. I am launching one batch. I will do some promotion for that particular batch. So that is for a particular accounting period, for a particular batch. That is revenue expenditure. So I am not saying about that. But there is one brand promotion expenditure. To build a brand, I will do some expenditure with a budgeted amount. Even though there is no batch, I will do some promotions to create my brand, to improve my brand impression in the mind of the student. Got this point? That is brand promotion expenditure. That is known as use advertisement expenditure. If you have seen, when Reliance Jio was launched, use expenditure was done. Even though sales operation was not started, then also a brand, to create a brand, a use expenditure was incurred by Reliance company. Are you getting what I am saying? So that is not for a particular accounting period. So when I am saying use advertisement expenditure, that will not be a revenue expenditure, because that is not for a particular accounting period. So that will be other expenditure. Of course, that use advertisement expenditure are not on tangible items, that are intangible item. Expenditure on advertisement are not tangible, are intangible item. Now just try to understand whether it will meet the definition of intangible asset. No, because it is also not an identifiable asset, because it cannot be sold separately, it cannot be given on rent separately, it cannot be transferred separately. Therefore it is not identifiable, and therefore it is not intangible asset, and therefore charged to PL as an expense immediately. So you can see one example we have done. You can write down example here. Example, write down example, advertisement expenditure. Second example, I will say staff training expenses. Staff training expense. Normally, if you see any service oriented organization, for example, let me take example of Infosys. So Infosys will not do expenditure on plant and machinery. They will do expenditure on their technical employee, because their entire profit is based on a skilled employee, and therefore they will do use expenditure to train their employee. Let's say they have incurred 1000 crore in a year to train employee. Now, whether that is for a particular accounting period? No, it is not for a particular accounting period. The staff training expenditure will come in this particular part, other expenditure on intangible item, and it will also not meet the definition criteria of intangible asset because that is also not identifiable. It is also not identifiable. Why it is not identifiable? Because it cannot be sold separately, it cannot be given rent separately, it cannot be transferred separately. It is not separable from business, and therefore it will also not meet the definition, and therefore entire expenditure will be charged to PL as an expense irrespective of amount. Only to give one clarification, now there is no concept of deferred revenue expenditure. That is totally bakwas. Now, if it is not meeting the definition of intangible asset, it will be charged to PL as an expense immediately. We can't defer it. We can't defer on any ground. It will be charged to PL as an expense in the year in which it is incurred, even though the amount is 1000 crore. Got this point right? On staff training expense. One more example you have done in your Bachman, preliminary expenses. What do you mean by preliminary expenses? Any expense incurred on the formation of company. And normally it is also not for a particular accounting period because the formation of company will give benefit. It will give benefit for a correct indefinite period. So the question is a preliminary expense. What will do? Correct. Once again, it is an other expense. It is an expenditure on intangible item. It will also not meet the definition of intangible asset. It will also not meet the definition of intangible asset, and therefore charged to PL as an expense immediately. Charged to PL as an expense immediately. Got this point? Correct. Sometimes what happens? We start developing our own intangible asset. Got this point? Suppose I am developing a formula to produce some of my product. That is development of formula, and that from that formula I will produce my inventory. Correct. But here it is quite possible if we incur some expenditure and we are of the view that there will be no future economic benefit even though such development is over. So can is no future economic benefit, no recognition criteria not satisfied, charge to PL as an expense. I have already given my example of website which I was supposed to launch. So it means if definition and recognition criteria not satisfied as per AS 26, recognize as an expense immediately. Very important point that is given in this particular para. Let us read. Expenditure on intangible item to be recognized as an expense if it does not meet the definition or recognition criteria. Definition and recognition criteria. Definition or English or recognition criteria. Any one definition not satisfied, recognition not satisfied, it will not be capitalized. Examples of other expenditure that is recognized as expense when it is incurred include expenditure in startup activities. For example, preliminary expenses incurred in establishing a legal entity such as legal and secretarial cost. Already I have explained. Expenditure to open new facility of business, any pre-opening cost, for example, inauguration expenses, etc. Expenditure for commencing new operation or launching new product or process, any pre-operating cost means if you want to launch a new product, correct. Now for that also you need to incur some pre-operating cost. This will be also not capitalized as an intangible asset. Expenditure on training activities, expenditure advertisement and promotional activity, expenditure relocating or reorganizing part or all of the entity means any reorganization cost, relocation cost, you are shifting from one location to another location, these all will be charged to PL as an expense. You can't say that it will meet the definition of intangible asset, therefore we recognize it. It is not identifiable. It is not identifiable. Understood? I hope you understood. There are some reference question is given that you can do it. Okay, chalega. Today this much only. Today I will do this much only. I hope you have understood the definition of intangible asset. I have taken my time, even though believe me, not so much important from exam point of view. But I know the importance as a chartered accountant, and therefore I have done the detailed discussion. I could have completed in what 10 minutes also, But if I will not teach you, who will teach this point to you? Correct now. So because after CA inter, you'll come to CA final. So once you come to CA final, you should know the exact meaning of intangible asset. That was the mere intention. But of course, from examination point of view, I'll say this much discussion was not required. Thank you very much for today. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye. Love you all.